It was another night of amazing action in US trading. The NASDAQ 100 index, despite the fact that it's already at record historic levels, leapt higher. It did not make contact with the previous night's trading range in any way. It opened higher and went higher again. And that sort of behaviour in a market, especially given the rise that we've seen since April in that market, is just extraordinary. And while we have very serious concerns about the outlook for the US economy, given tariffs and potential growth challenges, and we have real concerns about the US market when it comes to valuations, that sort of price action tells us that momentum is the major driver at the moment, that the market is moving up because it's moving up, and it will continue to do so until it stops. And that might sound nonsensical, but that's exactly what's happening at the moment. The market is feeding on itself and running higher. And although it's very hard to relate it to any reasonable investment theory, the reality is, given the behaviour, the price action that we're seeing at the moment, it appears the market is more likely to continue higher than pull back at the moment. And that's an extraordinary situation. NASDAQ led the way last night, up 1%, but the S&P 500 also gained by about 0.5%. The S&P 500 closed above the 6,600 for the first time ever. And that's the sort of historic news that we're looking at this morning, despite the fact that it seems quite every day at the moment. The big leaders, of course, given that performance from the NASDAQ, were the Magnificent Seven. Alphabet up 4.5% and now worth more than $3 trillion, becoming the fourth company in the history of the world to be worth that much. Tesla and Oracle all are both up around 3.5%. And we heard from Goldman Sachs overnight, who say they believe there will be 5 rate cuts in the coming cycle, 1 each month up until the end of the year, starting this week, and then 2 more next year. Now, whether or not they're right will depend very much on what happens with inflation and with jobs in the US, but nonetheless, that's their view from the heart of Wall Street, that there'll be 5 rate cuts in the US. There is some talk that once rate cuts are delivered, we might see a bit of a reassessment of equity market prospects. At the moment, the markets are being fueled by that prospect of rate cuts. The reality of them might see us sell the factory action and a bit of a recheck. Once investors get the interest rate cuts they've been looking for, they might also reassess the market and the risk premium that's currently not being applied to many stocks. So something to watch out for once rate cuts are delivered. Gold mining stocks have been leading the charge in both directions on the Australian share market. For the last few weeks, they were the main leaders. Last week, 5 top performing stocks were all gold mining stocks. Now, one of the challenges for investors in gold mining stocks is the noise in this sector. Now, the gold price has had a fairly steady gain all the way through and appears to be continuing up. There's no doubt that it's in an uptrend at the moment, and although that could break at any time, investors and traders will lean on that uptrend in the short term. But the action in the gold mining stocks vastly over-exaggerates that, and that's because they're favoured trading tokens. A lot of day traders like to trade the gold stocks as a way of getting exposure to gold on the share market. It's a liquid way to get in and out quickly, and for that reason, there's a lot of activity that exaggerates the moves in the underlying companies and the gold price. So that noise can be very difficult to deal with. It does sometimes offer opportunities. Evolution Mining is a great example. Its stock has run and run. And although the gold price is up 41% year to date, Evolution is up much more than that. In fact, it's hit all-time highs again last Friday night. Now, the previous high in June was at $9.77. Overnight, last Friday, we saw it touch $9.92 and then fall away from that mark. And the better than 5% fall that we saw in Evolution shares yesterday reflects the fact that it did in fact touch that all-time high and went through it, but then failed back through it. And this formation on a chart, a push towards a level, particularly a level like $10, which could have a psychological impact, a push toward it, a fall back, a second push toward it, and then a fall away is known as a double top. And it could be a sign of short-term weakness to come in Evolution Mining share price, despite the fact that the outlook for gold remains positive. So that overtraded nature in Evolution Mining might see it pull back further. And if that's the case, that might be an opportunity for those who have not yet joined the gold rally to get involved. Plenty of top performers, though. It's interesting to note, year to date, Regis up 120%, Newmont the global giant in gold mining, up 100% year to date, and Vault up 95%. There's a lot going on in those gold miners, and the diversification across asset classes that many investors employ by going into gold stocks certainly paying off at this stage of the market cycle. Looking at other stocks, we've got Vulcan Energy at the moment, up 12% yesterday. Clearly a more positive outlook for lithium miners generally has helped with Vulcan. There is some talk amongst traders about a global investor targeting local explorers. That seems to me to be very much in the category of they would say that, but nonetheless, a very frothy market in lithium stocks yesterday, and it does look like we could see continuation of that trading. Perhaps some of that energy that we're seeing in the gold stocks could be transferred back into the lithium sector. Another stock in focus at the moment is New Hope. It reported and its profits fell 7.7% in the full financial year, but that was not a surprise given the lower coal prices. The stock is up 17% over the last 6 months from the lows that were seen earlier in the year, but the sector overall is flat. Now, this stock has a hold rating, and that to some extent, I think, reflects the fact that this stock is very unpopular. In fact, there might be a social cost to owning coal stocks at the moment. It's certainly not something I hear much at dinner parties. But here's the thing about unpopular stocks. It looks incredibly cheap. At the moment, New Hope is trading on around 7 times earnings. Now, compare that to the NASDAQ index, where many of the leading stocks are trading on more than 100 times their earnings. It's very hard to argue that this stock is not cheap. And the reality is paying 34 or 36 cents a year in dividends, it means that we've got a cash yield of between 7 and 8% with some franking. That's a better than 10% yield to hold a coal stock. So investors need to ask themselves what's more important to them, to be popular at dinner parties or to hold stocks that pay incredible dividend streams.